What's up, everyone? This is Jake Meyer back again with the Crestview and Magnuson Equity and Crypto Roundup. And got a couple things to discuss today, both sides. And I think the best thing that we can do is just get started. So, the first thing that I wanted to talk about was Peloton. Peloton, as you guys might know, is the at home workout equipment with their uh, monitors that provide you with exotic locations where you can virtually run on beaches and mountains and things like that. And they've been extremely disappointing since the middle of 2021. Their stock price has fallen from up over $160 per share down to the $20 range and kind of trades at the $30 range at the moment. And because of that, they've seen their market cap fall from over $50 billion down to under 10 billion at one point, and I think it's currently around 12. And the main thing about this is the company hasn't really made any improvements to their product line or added new varying products to distinguish them and you know give people a reason to choose them over going back to the gym as those open back up. But the main thing that I wanted to talk about was some of the interest they're getting from Nike and Amazon as far as being purchased. And I think those are two, interesting, relevant companies. They're very large, so this is a big deal if they get purchased. Another reason that we see some of this purchasing news come out is because their CEO John Foley actually stepped down and is being replaced. He made a couple questionable decisions, like purchasing a lease in New York for 20 years at an office space and hiring his wife as a C-level position, so she's making a lot of money. We don't necessarily know her skill in the field. So Peloton, which once was this extremely large company, is now, you know, thinking about getting purchased. They've got a new CEO coming in. So nothing really good has been happening for them in the short term. Okay, now, do you want to pull up the stock price? Stock chart. Yeah, so we can take a look at their chart over the last, 6 months or so. Gradual decline. Stock price fell below the 200-day moving average. It never went back up. And yeah, their stock price did pop within the last couple weeks on the news that Amazon or Nike was going to have interest in purchasing them. You can see the volume coming in, but I just think that this purchase is going to be best for, Peloton and going to be really good for whoever purchases them, whether it's Nike or Amazon, because it's just going to add new market segments to their already large markets, and it's going to allow them to diversify their inventory and their products to, keep and retain that new market. So I think that's all for Peloton. A couple more things on equities. I think I'm going to briefly touch on the Fang Stocks, a couple of those companies who had earnings within the last week, and I believe it was February 3rd. We had Amazon and Google earnings. You can go check out the results on Google to get any in-depth numbers, and we also go over some of those numbers on Luck of Effort, which is a podcast that I've been a part of for a couple months now. Talk about some interesting topics, but we go over some of Amazon and Google's numbers from their earnings report into more depth. But briefly here, we'll just put it this way. They were extremely good for Amazon and Google. Amazon's showing, great improvements. They missed revenue, but basically everything else hit. And then Google, their revenue has been growing ridiculously, even over the course of the pandemic. And, there has been no inverted returns for them. So that's kind of a good sign for the market. The markets have been kind of choppy the last week, but on those earnings reports, the next day we opened up higher. And then we're kind of in a weird spot. We still got some correcting to do, but we might see some choppy days, some green days, some red days, probably nothing more than 1% or so for a couple days here, maybe another week or so. But overall, I think that we've got some correcting to do with our bond yields going up and the threat of interest rates rising, which is definitely something that kills returns for stocks. So we'll just have to keep monitoring those. And yeah, just wanted to discuss fangs because those determine, in essence, where the market would go because they're such a big player. Um, Alrighty, let's get into crypto. So if we can pull it up on the screen, I have an Instagram account where I kind of walk through some of my trades that I take, or some of the trades that I miss, or some of the setups that I'm looking for. I kind of look at the market and try to give some predictions as to what's going to happen. So if you want to, it's not your average trader. Your is spelled UR. Um, you might learn a thing or two, or you can take some of my setups. But again, I'm not a financial advisor, so I wouldn't recommend doing that. Also, I trade some leverage, so don't ever do that. But yeah, basically, I'm very upset that I missed this trade. Um, I was looking at Terra Luna, which is a cryptocurrency that's a layer one solution that's got an awesome mechanism with their stablecoin to where every time a stablecoin is minted, their stablecoin's UST. And every time a UST is minted, actual Luna crypto gets burned. So basically, it creates this hyper deflationary environment as the supply gets burned and the demand stays up. So I was looking at the chart and I drew out some key areas, mostly supply and demand, as well as looked for some take profit points if we were to reach those zones. And there was a couple negative pieces of news that was coming out about Luna in social media from their team. So I was looking for a pullback to an area of demand, which you can see on the chart is that green box that we so neatly and nicely tapped for rallying. This actually was at like 2 in the morning, so I unfortunately missed out on a 20% run. And I guess the main takeaway that I can provide for you guys about this is that if you see a chart is moving toward your setup or it's relatively close to reaching your entry point or your exit point, I'd recommend not falling asleep until that happens so you don't make the mistake that I did and miss out on 20%. That's just, it's just not too great. As you can see, I had the chart, I was confident in the setup and it hit perfectly. And unfortunately, I wasn't able to catch that move. But, things happen, lessons can be learned, and I'll catch plenty of moves like this in the future. All right, so there's that. Give me a follow if you end up watching this. We'll see. I'm not really expecting much, but maybe at one point we'll blow up and get 100K followers or something. Lastly, let's go over Bitcoin and the crypto market as a whole. If we want to pull up the chart of Bitcoin right now, I've got my markup drawn here. This is, I believe that says May of 2020, so it's like 6 or 9 months daily candles. Bitcoin it's kind of in a dangerous spot here. There's really two moves that can happen. I've kind of marked some key levels and I've traded it a little bit in some of these ranges. You see I've got some lines drawn for wedges and bear flags, bull flags, things like that. So what we saw leading up to most recent times is a couple bearish pennants where we broke below. And actually we saw a bearish pennant break below for about a day and then, price boom back up over 40K. And I think we got up as high as 46. So looking at this chart, the next key zone that I'm looking at is around that $47,000 mark to test some of those orders in that area. But the whole thing that I wanted to discuss with you all is that I personally believe that we're kind of experiencing a higher time frame bull trap, and Bitcoin could just wick down at any minute, causing some of these buyers to get stopped out. And personally, I think that's the case because we haven't really tested orders below the $30,000 mark, at all, since 2020 late 2020 when we, broke that up, went up to close to 60K. And then we did pull back to around 29 and a half, 30. But I do think that there's a lot of demand and a lot of orders placed below that level. So we could pull the chart back out one more time. I really think that we've got to test, if we can get lower to around 31,000, I think that that's the first level I'll be watching, because there is a lot of demand there. As right before our last run, in late or mid 2020, after the pullback in May, there are a lot of orders placed in that area. Kind of like nice, neat round numbers. A lot of institutions and a lot of big whales place their orders at round numbers, and they can move the market. So that last candle in May or April or June, whatever that is, caused the massive shoot up, leading to our new all-time high of 69,000. Haha. But yeah, I think that we're definitely going to go. Maybe not. I won't say definitely, but personally, I would like to see Bitcoin go lower, and then I would probably bet the house on crypto, not financial advice. But yeah, I think 31K, then 29,000, then 27,000 are going to be three pretty important levels. It's kind of hard to tell in this chart, but just below our previous lows in 2021, there's a lot of liquidity down there, a lot of stop losses. So I'd like to see us wick down and capture some of those sell orders before moving up. And I think that actually this run we're seeing now is a bull trap. So I would be wary if you have open positions. I would say let them ride until we see some signs of a reversal or, price exhaustion. So with that in mind, please trade responsibly. And this has been Jake Meyer with Crestview and Magnuson. I hope you all have a blessed day, and I will catch you back soon.